Hey gang, Larry Bailey here with Awesome Technologies Inc., bringing you another weekly newsletter. This one is read off today, February 20th, 2024. We are going to go through the week of February 12th, 2024. The markets were closed yesterday for President's Day, but there was still a lot of stuff to review for last week. As you can see, the MBS Highway ticker up here, Treasury yield is a little bit lower, which is a good start, and the price for mortgage-backed securities is higher, which is also a good start. As always, all this information is brought to you from MBS Highway, your trusted source for mortgage market intelligence. Check out mbshighway.com. Most importantly, though, if you are in the lending industry and you actually want to know if what you're doing is the best practice way to make things work, especially in 2024, especially if you're using the Encompass platform from ICE Mortgage Technology, you've got to reach out to me. You can reach me using larry@atihelps.com. We're Encompass workflow experts, honestly, mortgage workflow experts to be precise. We can help you with Encompass, we can help you with Meridian Link, we can help you with Byte and other platforms as well. Doesn't really matter what you're using. We know how you should be running your mortgage company, bank, credit union when it comes to lending, and we can help you with all things underneath that umbrella. So let's get into the week of February 12th, 2024 in review. The wholesale and consumer inflation were both hotter than expected in January. There was also a pullback in new home construction, though home builders are feeling confident about the year ahead. Here's last week's headlines. First one is consumer inflation above forecasts. The next story is hot wholesale inflation, a surprise. We saw that on Tuesday. The next story is home builder confidence at a 6-month high. The next story is home construction slowed in January. The next story is retail sales tumble to start the year. And the last story is challenges remain for job seekers. So we're going to go into that first story, which is the consumer inflation above forecasts. And we see some data here brought to you from the Bureau of Labor Statistics. The latest consumer price index, the CPI, showed that inflation rose 0.3% from December to January, coming in hotter than economists had expected. On an annualized basis, the CPI, that's again the consumer price index, it fell from 3.4% to 3.1%, but it's not quite as low as forecasted, and it's still a move in the right direction. This core CPI, which strips out volatile food and energy prices, that increased 0.4%, while the annual reading remained at 3.9%. Both figures were slightly higher than the estimates expected. The rising shelter, motor vehicle insurance, and medical care service costs helped push inflation higher last month. However, shelter costs have been moderating based upon other reports that we've been receiving, which hopefully will help inflation cool further once the reporting catches up. Bottom line here, gang, is remember, it's February 2024, and even though the latest inflation numbers were hotter than expected, inflation has made significant progress lowering after its peak in 2022. The headline reading, which is now at 3.1%, that's fallen from 9.1%, which was just crazy. And while the core reading is at 3.9%, which is down 6.6%. I want to just put two personal anecdotes in here. Number one, there's this thing about inflation lowering, and that means costs are going to be going back pre-pandemic. That's not this conversation. If you want costs to go down, that's actually deflation, which is a whole nother story. So the fact is, what we're trying to do is, if we have $1 today, we're trying to make it stay as close to $1 in goods as long as possible. And when we were running at a 9.1%, that means that dollar before that is now worth 91 cents or 90 cents and change. So that's the reason why we want to cool down inflation, is so our dollar that we make today lasts as long as possible in the future while we're still maintaining growth. Little econ lesson there for you from Larry Bailey. Hey, listen, by the way, if you're listening to this and you want to see what we're going through on screen, head over to mortgage.community. It's free to join. It's for everybody, regardless of who you work for or where you work or what your position is. If you're in mortgage and you're in the industry and you want to learn more, hop over here. And if you're listening to this and you want to learn more about what's going on in the mortgage industry, you should hop over too. It's open to everybody. Next story is hot wholesale inflation, a surprise. This came out Tuesday last week. And the producer price index, which is the PPI, that measures the inflation at the wholesale level. That rose 0.3% in January, coming in above expectations of 0.1% rise. So on an annualized basis, the PPI still fell from 1% to 0.9%, and while this is a very low number, it was expected to fall 0.6%. The core PPI, which strips out volatile food and energy prices, was much hotter than expected with a 0.5% rise. The year-over-year reading, that rose from 1.8% to 2%. So the bottom line here, gang, is despite the upside surprise in the data, wholesale inflation is still trending lower, right? We might see peaks and valleys, but the trend line is what's important. January's 0.9% year-over-year reading is a sharp drop, going back again to 2022, where we saw 11.7% in its peak. You can see my dog back there. Her name is Zoe, in case you wanted to know. So remember, the Fed began aggressively hiking its Fed funds rate, which is the overnight borrowing rate for banks, not to be confused with mortgage rates. They started doing that back in March 22, and they did that to try to slow the economy and curb this runaway inflation, that 9%, 11.7% in the PPI. So, or the CPI, excuse me. So in any event, following 11 hikes in the cycle, the Fed has pressed pause their last 4 meetings as a sign of cooling inflation grew. The Fed is expected to begin cutting Fed funds rate later this year, given the progress made to tame inflation. We'll have to see if these hotter than expected readings for January ultimately impact the timing of their plans. Hey, you want housing? You got to get home builders to build. And one of the things we see here is home builder confidence at a 6-month high. So there's a nice image on here. The source of this is from the National Association of Home Builders. And here's a story. So sentiment among home builders rose for a 3rd straight month in February, reaching the highest level since last August per the National Association of Home Builders, NAHB. Their housing market index climbed 4 points to 48, and while this is still in contraction territory, the reading is just shy of the key break-even level of 50. And any score over 50 on this index, which runs from 0 to 100, signals that more builders view conditions as good than poor. All 3 index components posted gains this month, with current and future sales expectations now both in expansion territory, while buyer traffic is also moved higher. Bottom line from this story is the NAHB's chair, that's Alicia Huey, noted that pent-up demand should result in more buyers entering the market if mortgage rates continue to climb this year, and this expectation was one factor that helped the builder confidence improve. The NAHB also pointed to a lack of existing home inventory and the prospect of future rate cuts by the Fed as additional reasons why builders were feeling more positive this month. Awesome. Let's keep it up. Next story is home construction slowed in January. So you've got home builder confidence high, and then you got home construction slowed. And you're like, huh? So we've got housing starts hit a 5-month low in January, down a sharp 14.8% from December, while the bulk of the decline was in multifamily projects. Single-family starts also ticked lower. However, the NAHB predicts that, quote, single-family starts will rise about 5% this year, close quote. That's per their chief economist, Robert Dietz. And there are already signs to support this forecast. The single-family building permits, those reflect the future construction. They were at the highest level up in a year with a whopping 35.7% year-over-year comparison. Crazy number. Bottom line here, gang, moderating mortgage interest rates in 2024 will ultimately lead to gains for single-family homes, said the NAHB's chair, Alicia Huey. Given the persistent low supply of available homes for sale, more inventory is welcome news for the buyers around the country, although there is still a long way to go for supply to catch up with demand. The pace of completed homes right now that'll be coming to market is only around 1.4 million homes annualized, and then of course we subtract about 100,000 homes on average to be replaced due to aging. This puts us well below the demand of household formations that are trending at almost 1.7 million for the year at the end of December. So 1.4 million homes maybe being constructed, 1.7 million people need homes. Yeah, we got a bit of an imbalance there. So more demand than supply will continue to be supportive of home values, especially if mortgage rates decline during the busier spring home buying season. We'll see what happens. The next story is retail sales tumble to start the year. So retail sales fell 0.8% from December to January, coming in well below forecasts and breaking a 2-month streak. It is really 2 months of streak of increases. Sales were 0.6% higher when compared to January 2023. I usually say 1 is okay, 2 is more than 1, but 3, you get 3 in a row, now you got a streak or now you got a trend. Anyway, that's just my own personal opinion. So the bottom line here with this retail sales tumbling to start the year is after a strong holiday shopping season, spending declined in a variety of categories to start the year, including gas stations, home improvement stores, and online retailers. Some of the pullback in January could be the natural lull in spending after consumers ramped up their purchases and took advantage of holiday discounts late last year. The use of credit cards or buy now, pay later program could also have contributed to slow spending in January as debts are now being repaid, hopefully repaid. The Fed will be watching this data closely as the strength of our economy will impact monetary policy decisions, and it will be important to see if retail sales pick up as we move ahead this year. I know a lot of stuff I bought, I ended up returning in January because you could. The next story is challenges remain for job seekers. So despite some of the recent high-profile layoff announcements, the number of people filing new unemployment claims actually declined 8,000 last week. There were 212,000 initial jobless claims reported. However, continuing claims rose by 30,000. And we're back almost up to 2 million people here. We've got 1.895 million people still receiving benefits after filing their initial claim. That's a lot of American citizens looking for work. So the bottom line here is while initial jobless claims are still relatively low, the real story is continuing claims, of course, which reached their second highest level since November 2021. Continuing claims have been trending higher since reaching a low of 1.658 million in September. Remember that? And this suggests it's becoming harder for people to find a job once they're let go, which totally sucks. To which I say this, if you follow me on LinkedIn, I talk a lot about this. If you're out there looking for a job, go to any of these places you can create a free website. You can do it with a lot of different places. I won't promote one over the other, but create your own website, create your own brand. Grab your own domain. It's like $12 for the year. Doesn't have to be fancy. And then put up there what you are, like who you are, what you do. How can you help a company make more money? Because that's why they hire people, right? Businesses hire people because they need them for a particular job, typically to make money or keep the money that they've made. So figure out who you want to work for. Figure out why they think they should hire you based upon your skills or experiences or what you can do for their company. And then apply, and then rinse and repeat. But you got to make sure that when you're putting in applications, I know it's really easy to click submit in like scattershot, but honestly, I've found that you've got to be pinpoint accurate with who you're applying for and how you can make a difference in their company or in their job, because that's what's going to catch their attention, in my experience. We're going to move on to the family hack of the week here. This homemade salsa, courtesy of Delish, makes the perfect accompaniment for National Tortilla Day on February 24th. That's in 4 days. Yields 10 servings. Here you go. You preheat your oven to 400 degrees Fahrenheit. On a large baking sheet, toss 1 white onion, quarter that thing up. 2 jalapeno peppers, stems removed, half lengthwise, and make sure they're cleaned out. You don't want those jalapeno seeds. And 2 cups cherry tomatoes with halved, and 1 tablespoon of olive oil. Season all that up with some salt and pepper. Roast those vegetables until slightly charred, which is sometimes about 20 minutes. Transfer that onion mixture to a food processor. Add 3 heirloom tomatoes, quarter those. 3 cloves garlic, 1/2 cup fresh cilantro leaves, and the juice of 1 lime, and 1/2 teaspoon ground cumin, and a pinch of crushed red pepper flakes. Be careful with those red pepper flakes. Season all that up with some additional salt and pepper to your taste. Pulse several times until salsa is mostly blended, but still slightly chunky. So I didn't see where they said throw it into a blender. But if you have a blender, throw it in there and pulse that thing. Don't let it whir around. Just pulse it. And then, hey, let's eat the thing. So add salsa to a serving bowl and enjoy with your favorite tortilla chips. Here's what's going on this week. This is the week of, again, February 20th, 2024. Markets were closed yesterday, Monday, for President's Day, and in the minutes from the Fed's latest meeting will be released tomorrow, Wednesday. which always have the potential to move markets. Plus, more housing news will be reported on Thursday via January's existing home sales, along with the latest jobless claims. My name's Larry Bailey with Awesome Technologies, Inc. Thanks very much for always coming to listen to this. If there's anything I can ever do, please email me using larry@atihelps.com or check out our website. There's a ton of stuff on there over at awesometechinc.com. And for goodness sake, if you're not already a member at the mortgage community, get over to mortgage.community and sign up. Take care, everybody. See ya.